Hi, everybody, and welcome. I'm Carl Fisher of CamaPlan. I'm honored to have Elizabeth Cummings with us today, as she'll provide answers to some of the more complex, frequently asked questions concerning IRAs. Beth, welcome today. Here's another question. You were talking about disqualified persons earlier. Can you give us some examples of who they would be?
Sure. Basically, the easiest way to remember that is a disqualifying person, as far as a family member goes, it's someone that is lineal. That is my mother, my father, my grandparent, my child, a lineal descendant. So, for example, I can't buy rental properties and have my dad, who's retired, doing the fixer-upper work on my unit and paying him. Now he's getting an indirect benefit. I'm getting an indirect benefit because he's probably not charging me. So you cannot have any kind of a relationship like that with any lineal descendant. There are also, you know what, I should look at this more closely. There are relationships that cannot happen, like if my mother owns an S corporation, 50% or more. She cannot do business with me, A, because she's my mother, B, because now I have an ownership situation in an S corporation. So even if she is sheltered within her corporation, the fact that she owns 50% of it draws her right back, draws her corporation right back into the lineal descendant and therefore disqualifying persons rule. So some folks try to get around that by putting it through an entity that, you know, mom and dad own. Well, that doesn't work because mom and dad might be 50-50. They own the whole thing. We're right back to being a lineal descendant. Whereas there's not such stringent rules on the horizontal descendants such as aunts, uncles, cousins, brothers. We can do a little bit more with folks that fall in that area of relationship. But again, each transaction and relationship should be evaluated individually. So I'd love to hear the client's specific case before I would okay even an aunt or an uncle or a cousin.
Right. There can't be any benefit from
Correct.
it. But there's also partners and fiduciaries that fall into that, and trustees that fall into that category as well, right, Beth? So they should run anything through you like that.
That's right, absolutely, because I have heard so many scenarios, ones that I never even thought I could have imagined. So if you can come up with it, just run it by me first. That's why we pull out the whiteboard session and start making a flow chart and making sure that we're not falling into those disqualifying arenas because it's dangerous.
Hey, Beth, thanks a lot. As always, this information is for educational purposes only. Each individual's circumstances can be unique. This webinar should not be considered as rendering tax, legal, accounting, or investment or other professional advice. If tax or legal, accounting, investment, or other similar expert assistance is required, the service of a competent professional should be sought.
Great. Thank you so much, Carl.